we reviewed economic and financial developments in the United States and around the world and decided to leave our policy interest rate unchanged. My colleagues and I have one overarching goal: to use our monetary policy tools to sustain the economic expansion with a strong job market and stable prices for the benefit of the American people. Incoming data since our last meeting in March have been broadly in line with our expectations. Economic growth and job creation have both been a bit stronger than we anticipated, while inflation has been somewhat weaker. Overall, the economy continues on a healthy path, and the committee believes that the current stance of policy is appropriate. The committee also believes that solid underlying fundamentals are supporting the economy, including accommodative financial conditions, high employment and job growth, rising wages, and strong consumer and business sentiment. Although first quarter GDP rose more than most forecasters had expected, growth in private consumption and business fixed investment slowed. Recent data suggests that these two components will bounce back, supporting our expectation of healthy GDP growth over the rest of the year. At the start of the year, a number of cross-currents presented risks to the outlook, including weak global growth, particularly in China and Europe, the possibility of a disruptive Brexit, and uncertainty around unresolved trade negotiations. While concerns remain in all of these areas, it appears that risks have moderated somewhat. Global financial conditions have eased, supported in many places around the world by an accommodative shift in monetary policy and, in some cases, fiscal policy. Recent data from China and Europe show some improvement, and the prospect of a disorderly Brexit has been pushed off for now. Further, there are reports of progress in the trade talks between the United States and China. The committee views these developments, along with the outlook for continued growth, a strong job market, and muted inflation pressures, as consistent with continued patience in assessing further adjustments in monetary policy. Our outlook, and my outlook, is a positive one, is a healthy one for the U.S. economy, for growth for the rest of this year. And I would say that the basis for that really is consumer spending and business